guys, welcome back to another video. In today's video, I'm going to go through a checklist for the ICT 2022 mentorship. So what you'll notice on screen, once I bring it up, these are the things that you will need to look for. So I've just made this a little bit bigger for now. So what you'll need to find is you will need to see a run on buy side or sell side liquidity. This can be in the form of equal highs, it can be one single high, it can be, previous daily highs, etc. You will then need to see a market structure shift, creating a fair value gap, also known as obviously displacement. So if you see a market structure shift and displacement, this is basically what it is. And if it leaves a fair value gap, this is what we need to see. A fair value gap in the premium of discount of the displacement leg, and then you want to enter the trade inside the fair value gap that has been created. And one of the most important things that you will need to know is where you need to target. So you will want to target buy side liquidity or sell side liquidity, and you can also target fair value gaps in the direction that you are trading in. So that's the overall idea of the trade checklist, a really simple one, and if you go through the charts you'll notice that it does work. So if we just move this up here, so I'll just leave that in the top right hand corner, and what I've done is I've marked out a couple of trades that you will obviously be able to take if you are trading using this checklist. So as you can see, I've got Euro USD, and I've also got a couple of examples. I've got one on US 30 and also GBP USD. So what you will notice is we've got buy side liquidity here in terms of these highs. So we've got 1, 2, 3 highs, buy side liquidity, very, very clear right here. And what you will notice is that is a run on buy side liquidity, which is checklist point number 1. And then what you would do once you have got this is you would then drop onto a lower time frame. So in this example here, I will be dropping down onto the 1 minute time frame, and we've got a little bit of a complex one right here, because if you notice on the first trade, what you will notice is obviously you could class this as a market structure shift. You might class this, and if you don't want to, if you don't class this and you don't, recognize this as a clear low, what you can do is you can use, like this low or this low as a market structure shift, and then you can enter on this fair value gap right here. So we've got a run on our buy side or sell side liquidity on the higher time frame. You'll then drop to a lower time frame in order to enter a trade, get a better risk to reward and things like that. So market structure shift, creating a fair value gap. If obviously if you do recognize these as lows, this will then be that checkpoint met. As you can see, there's a clear fair value gap right here, clear displacement coming down, taking out these lows right here. So what you will notice is we've had a run on buy side or sell side liquidity on the higher time frame, and now we've dropped down onto our lower time frame in order to catch our entry. So if you do class these as a low, so for me, what I've noticed is a lot of people, when they are using change of character or chalk, whatever you want to call it, they will use the inside bar, and obviously if the inside bar is broken, that will be then classed as a valid change of character. So if you do class these, that's absolutely fine, and then you will be able to get an entry on this fair value gap right here. But if you want to wait for something a little bit more clear, and you use this, or you use this low right here, what you will notice is if we zoom in, you will see a fair value gap created on this, and then you can enter. And if you enter on this trade right here, what you might want to do is you might want to cover this high, which would give you a bigger risk to reward. You could cover this, but for me, what I would do just to be safe is I would cover this high right here at the top, this one, just to be safe, and you can still get a clear 1 to 5. Obviously, we're targeting, sell side liquidity down here. We've got a couple of relative equal lows down here that you can target. You could target, maybe this low right here, this fair value gap here. But for me, the logical target would be these equal lows down here as sell side liquidity. So what we've got overall is we've got our run on buy side or sell side liquidity on a higher time frame. We've got our market structure shift, creating a fair value gap either on this example or this example. We've then got a fair value gap in premium or discount. So is this in the premium? If you obviously go from the low to the high, as you will notice, this fair value gap is in the premium. Again, in this example right here, if you go from the low to the high, you will notice that this fair value gap is in the premium. Maybe you want to even drag it out to this high, which would be absolutely fine. It's still within the premium and it's still valid to take. So then you would obviously enter the trade inside the fair value gap, which we have done right here, and then target buy side or sell side liquidity, or even a fair value gap, which obviously I've just gone through there. You could have targeted this low, you could target this low, you could target this fair value gap down here, or these equal lows. So these equal lows do make sense. It's a good target and you've got solid risk to reward. So that's the Euro USD example. If we just go over onto US 30, what you will notice is we've got a couple of equal lows down here, and if we drop down onto the 5-minute chart, you will see it's a little bit more clear. So a couple of nice equal lows down here. We've got a low here. This is then taken, and then you will drop down onto your lower time frame. So at the moment we've got a run on sell side liquidity. Drop down onto your lower time frame, and as you can see, we then get a market structure shift, which would be this one right here. So we get this taken, we get a market structure shift right there. You could maybe, for example, this could be a market structure shift, but is there a fair value gap within here in order to take your entry? No, there isn't. There's one little one right here, but it's mitigated by this wick. So the overall place to get involved in this trade would be this fair value gap here after this market shift. So is our fair value gap in premium or discount? So in this example right here, our fair value gap would have to be in discount in order for us to take this long. So if we go ahead, get our fib, take it from the top to the bottom, and what you'll notice is this fair value gap is in discount. So we enter in the fair value gap, which is in discount, and then you can target buy side or sell side liquidity. So you've got a couple of options. You could target somewhere down here. You could target a fixed risk of 1 to 4. You could target somewhere up here. You could target even this high right up here. But for me personally, I probably wouldn't do that. Would you then? If you did target up here, would you like sitting through this pullback? Yeah, probably not. It would scare a few people if you were sitting through that. Price would have gone up to around 5.6R, and then it would come all the way back down towards your break even level, maybe if you're break even. And yeah, it would be quite scary. So in terms of this, and in terms of the strategy, you might want to have a fixed risk to reward of around 4R, and as you can see here, tap in and then we hit 4R quite quickly. So onto GU now, and as you can see, it's a similar kind of example to Euro USD. What you will notice is we've got a lot of sell side liquidity below here. You could zoom in obviously, and you could have just like this sort of area, but if you zoom out, what you will notice is we've got some sort of like a support area right here, so support and resistance. What you'll notice is price is coming down, and it can't break through this level. It's just coming through, piercing through with wicks. It's coming back down again, and then obviously it pierces through with a wick, and then eventually what happens is we do come below here, take out all of these orders, and then we have taken sell side liquidity. What you will do then is obviously drop down onto a lower time frame. So what you might be thinking is, why aren't you taking a trade somewhere up here? And obviously because you've taken sell side liquidity with these candles. But what you will notice, if I just come up here and put on my sessions, this is not actually in session time, so you wouldn't be taking a trade up here. And what then happens is we come down, and then we've got a little bit of price action before we do get an entry. But what you will notice is there's no market structure shift or no fair value gaps in order to get involved. You could class this as a market structure shift, but there's no fair value gap. And the clear one for me would be this one right here. Then if we come up, as you will notice, the fair value gap is in discount of the displacement leg. Price then comes in, taps us in, and then you can target, in any way you want really. So in this terms, I've just gone ahead and targeted towards 4R, but you could come up, you could target these highs, maybe even these highs up here. And if we just zoom out, does it actually reach there? It does reach there eventually. So you would be in this trade for quite a long time, but overall, you just want to be targeting buy side or sell side liquidity or a fair value gap. So that's the overall checklist, guys, and just a couple of examples just to explain it a little bit better. As you can see, some people might be confused around here because we've taken sell side liquidity and we've not taken a trade, but obviously we can't take a trade because it's not within the London or New York kill zone. So that's just about it for today's video, guys. If this video did help you out and it did provide you any value, I'd appreciate it if you could drop a like on today's video. If you have any questions, feel free to drop them in the comments. And without further ado, guys, thank you very much for watching, and I'll see you in the next one.